Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday the 28th of the 4th, 2021. Time is just coming up to 0500 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday then, Tuesday the 27th, we had a negative unopposed driver in the yen, so no backdoor flows at minus 243. The opposing positive flows were going into the pound at plus 6116, into the euro at plus 83, and the dollar was the positive rock at plus 44. Activity plus or minus 243. Intra-week then becoming more relevant. This is from Monday the 26th, open to about 15 minutes ago. Again, we've got a negative unopposed driver in the yen at minus 328. No backdoor flows. The positive flows mainly going into the pound at plus 153. Into the dollar at plus 103, and the euro was the positive rock at plus 72. Activity plus or minus 328. Finally then, intraday, which is Wednesday the 28th, Asian session to about 15 minutes ago. We've got a positive opposed driver in the dollar this time at plus 64. Front and backdoor flows mainly coming out of the pound at minus 57, out of the yen at minus 19, and the euro was the positive rock at plus 12. Activity plus or minus 76. What's going to knock it about, or what has knocked it about? Well, early morning for us anyway, we had the AUD CPI, which was pretty much negative, quite horrible red figures, soft, and predictably they've sold the AUD off. We're long AUD against the New Zealand dollar, which hasn't moved much because the New Zealand dollar trade is overstretched anyway, in our opinion. Right, today we've got CAD retail sales and the Fed FOMC rates decision later on early evening for us. Right. And tomorrow, Thursday the 29th, we've got German consumer prices and US GDP. Right, let's have a look what's been happening in the asset classes. Our trades are about minus 700. We've been doing a little bit of jiggery pokery on the scaling, but it's basically static at that level. And we're waiting, obviously, like everyone else, for them to buck up and see what the Fed says. Right, euro then. So this is a euro complex. It's strong, except against the dollar and the CAD, which is stronger. The yen is weak, except against the pound, the AUD, and the NZD. The pound is weak, except against the AUD. The Swiss is strong, except against the dollar, the euro, and the CAD. The CAD itself is strong, except against the dollar. The AUD is weak across the board. As we said, they've taken the usual knee-jerk to the data. The NZD is weak also, except against the AUD. So and the dollar is strong across the board as we head into the Fed. So what have we got? We've got dollar strength across the board. We've got AUD weakness off the back of that data, and take your pick in the middle. Right. So let's have a look at the asset classes. So we'll start with the US dollar index. So US dollar index basically looks it broke the resistance. It's dropped. It's come back a little bit. It's 0.4 from our model floor. Gold gold had this double top, and it's now operating roughly here at this support, which was further down after the double top. Right, and it's about 0.37 from our model's floor. Oil looks like this. It's basically been messing about after the OPEC. It's 0.33 from the high. Oil is pretty much off the radar at the moment as far as traders are concerned. Wall Street had this break, and it's now flatlined, running into the Fed. S&P double top, break, similar situation to Wall Street. Tech finally broke its resistance, and it's come back, and it's flatlined but just above the previous resistance. Right, US 10-year on the bond, and the bond. Right, what have we got on the US 10-year? We've got this situation, 0.33 from the floor. Remember, this is the price, so the price is starting to go south again, so yields are starting to come off for the US, and the bond has a similar look to it, but it's only 0.28 from the floor. So arguably euro yields are outgunning US yields at the moment. This is likely to put upward pressure on the euro dollar. So copper. So copper 1, 2, 3, 4, 5. Had 5 pumps, went back to the second pump, went back to base camp. Then it's basically broken, and it's come back, but it's above the break resistance. So that's where we are there. And the US steel, it was sold off at a double top. It broke, and it's come back, and it's now 0.3 from the new high. So getting stronger, but nothing to write home about. Right, so let's just box this off then. What's going to happen today? Well, at the moment we've got this, the market is obviously waiting for the Fed, and the only focus that the no-brainers have got is the negative data on the AUD. So that's the short-term focus, and the dollar has been pretty weak, so as we run into the Fed, you may well find the obvious no-brainer is for the dollar to come back a bit and the AUD to be sold off. So that's one thing to look out for. So the AUD dollar, you're going to get downward pressure on the AUD possibly, and upward pressure on the dollar itself. That's very short term. We're short the dollar against the euro, the pound, and the AUD, and we're short the NZD against the euro, the pound, the CAD, and the AUD. Right, what's the Fed going to say? Well, it's basically the Fed needs sort of a steady outlook. It needs a tame bond market. It's printing like crazy. Issuing bonds is becoming increasingly difficult. Tapering is really out of the question for the Fed. You're likely to see a little bit of short dollar covering, and then a further fall in the USD. They've got no choice. They filled their boots too much on debt, and it's having the only way they can keep the show on the road is to keep the bond market happy. Yields need to come off, and because they're printing 55 cents on the dollar, if not more now, they need to deflate this debt away, otherwise it will absolutely destroy the Fed financial balances. Right, so that's where we are. We're going to stick with our trades. We may get opportunities to scale in and out, who knows. Be interesting to see what happens early this evening with the Fed. So I hope that was useful. See you tomorrow for the daily briefing. Thank you very much.